Welcome everyone. Once again, welcome to Legit Crypto and Forex. And I'm so excited because I'm about to share you a life changing trading concept that will go a long way to help you in your trading career. Now, I'm really excited. I'm sharing with you other blocks, other blocks, other blocks. Very interesting topic, very interesting and very powerful. Very interesting, very powerful. Guys, please don't skip any part of this video so that you learn fully what order block is. I'm teaching you from the basics to this at expert level, from the basics, that's from the scratch to the expert level, and you won't want to miss any part of this video for nothing. No, you won't want to miss any part of this video. I'll try my best to make it as snappy as possible, but because of the content, it might take a little time for you. So just patiently wait and watch until you grasp the detail about other blocks. And mind you, at the end of this video, I know you thank me. Now, thank you so much. I want to appreciate our returning viewers for coming back to watch this interesting video, and also to our new viewers, I also want to appreciate you for finding it fit to come to our channel and watch this video. Thank you so much, and I want to encourage you to keep subscribing to this channel, and also keep sharing this channel to your family and friends. Our members base is actually increasing, and it is because of the love you are showing to us in this channel. So thank you for the love, thank you for the subscription, thank you for turning on your notification, thank you for the comments and also the likes. Thank you so much. Thank you so much. Now let's move to the business of the day. Like I said, I'm so excited. Let's move to the business of the day. Now, I have a power note which I will be using, and then be mixing it with practicals. Be mixing it with practical, so that you will learn this strategy and this idea of Forex very deeply in your heart. Thank you so much. Now, let me go to my power note quickly. Now, Forex order blocks from basic to expert strategies. Now, order blocks are zones on the chart where big traders like banks and institutions place large orders. That is the buy order and the sell order. Now, this area often cause the market to move strongly, either bullish or bearish. That means up or down. Now, traders use these levels to predict where price might change direction or continue moving. That is the reason why we are studying the order blocks strategy, so that we'll be able to understand where institutions, banks, and hedge funds are actually moving. Because when you understand this, you make profit on time and much profit. But when you don't understand, you actually lose profit. You actually lose profit. Now, other blocks are so important. I always advise people, use other blocks. Use other blocks. Now you can decide to implement other strategy, the price action strategy, the liquidity strategy, the be the market maker strategy, etc, etc. But order block is one of the key strong fundamental strategy that a forex trader should learn. So hence the reason why I am doing this video now. First of all, what are order blocks? Now, another blocks is the last candle before either a bullish or bearish candlestick before a strong move. Now, this shows where big money entered the market. The last candlestick before the big move is another block. The last candlestick. Now look at this one. Look at this one. Look at this one. The last candlestick before the move. Now this is our candlestick before the upward movement. Look at it. This is our candlestick. Sorry. Oh, yes, this is a candlestick here. This is a candlestick before. Now, this is our other block. If we are to draw this now in a box, now I will have to draw it like this. It is our word order block. This is our order block. Now, look at the previous chart. Look at the previous chart. Now, look at another order block now. Look at another order block. Perfect one. Now, if we keep drawing this, you see that it will definitely align with the first order block. It will definitely align. That means they will stay together. They will definitely be together. Now, let's generally draw it. You discover what I'm saying. Be together. You see this one. You see this particular order block. Are you seeing it? Are you seeing how it met with the previous one? You see order blocks. See this particular order block, though it's tiny. Though it's tiny, but you see how it met with the previous. Now, these order blocks are the candlestick before the major move. The candlestick before the major move. Now, once you are able to identify this order block, price always return back. Okay, look at this order block. Very sweet. Look at from this particular one here, where you draw, you see it has touched three sides. That's an order block. Now you discover that price normally come to that order block, and then it also form as an area or a zone of support and resistance. Now let's move on, please. Now we have two types of order blocks. We have the bullish order block, and which also align with the bearish order block. Now we have two types of order block: the bullish order block and the bearish order block. Now, as regards the bullish, the last bearish candle before price shoot up is actually our bullish order block, while as regards the bearish, the last bullish candle before price drop is our word, our order block. Now let's look at quickly the clue to spot this order block. The clue to spot this order block. Now, usually from near support and resistance or swing high and low, we can use that to spot the order block, support and resistance or swing high and low. Now, when we're talking about support and resistance, like this is actually a resistance. This is actually a resistance. This is actually a resistance. This is actually a resistance, and it also serves as our order block. It serves as our order block. Now look at this swing low. See the movement going down, giving us another kind of order block. See, it's giving us another kind of what of order block. That is why I said the second one is what is the swing high and the swing low. So now this is a swing low. This is a swing low. Now this also serves as an order block. Now with this, when you draw this, you know very well that the best place for you to enter your trade is not at this place, but it is at this particular place for you to go for a buy, because there is an order block at that place. You see, now we use our trend line in order for us to trace the swing low, and then which serve as our support area, and then we now begin to move upward after we have what crossed this particular order block. Now one thing that I want us to understand, that this order block you get it mostly at higher time frames, please, and also at liquid pairs. Now I'm just drawing this here. I would love to switch to liquid pairs, more liquid pairs, like the Euro USD, Euro JPY, etc., etc. They are liquid pairs, not exotic pairs. Now look at this. This is a perfect example of what I am saying now. Look at this. Perfect example. You can see it is happening here. Look at from this particular side. You see it, and it respected it at this place. Look at what happened here also. These three regions. Look at what happened at these regions. Oh my God. Look at how it respected the order block. Now you can decide to use the wick combined. You can decide to use the body of the candlestick, but I'll explain this later for us. But I always advise people to stick with the body, because that's where the full candle start with the body, the full candlestick. Now you see it is an order block. You see there is an order block here, and you see there is another order block. Look at what happened at this place. You see, that is why I said this is actually fundamental. Now this is 4 hours time for now. This is actually fundamental. This is actually fundamental. Look at from here. Look at it. Look at what happened. We could see that the order block gave birth to another reaction at this particular point for the sell. So if you can draw this order block very well, you will see how that price must respect this order block. Price must respect is either you have a failed order block, or a working order block. Now let's move on quickly. Now this is the first clue. The second clue is you often look for a small consolidation before a breakout. Now a small consolidation before a breakout. Look at it. Look at this. Now look at there was a small consolidation here. There was a small consolidation here. small consolidation here before the breakout. Now this is just what it means for you to have the order block. Small consolidation, small consolidation. Now let me look for another. Now see another order blocks and you see the consolidations. Look at consolidations here. Look at it. Look at consolidations. Look at consolidations. You get it? Consolidation. Now these are what? Consolidations. And in them we have also what? Order block. You see, before the major move here, this was the order block. Before the major move, this was the order block. And then before the major move here, this was the order block. So you see, we are having what? Many order blocks. Now you can draw those order blocks and wait for price to either break or bounce on it. Now order blocks can serve as, in fact majorly it serves as an area of entry, and also it can serve as area of take profit. Now that's not what I'm focusing on now. Let's move on, please. Now, how to identify them? Look for the last candle before a big move, which I've been using, and then use higher time frame, such as the 4 hours time frame, which I've been using for and then daily time frame for strong order block. Why? Because order blocks can be broken. You see, I'm using the 4 hours time frame. Look at it, the 4-hour time frame. Look at it, 4 hour time frame, or use the daily time frame. Now I'm using the 4 hours time frame. Look at it here, 4 hours time frame. 4 hours. Why? Because those time frames are very strong. Now just imagine we have drawn this. Now this other block come down to a 1 hour time frame and your 15 minutes time frame. You discover that any trade you want to do this week should revolve or move around this particular place. If you are selling, you should sell between here and here. If you are buying, you should buy also between here and what? Here. You see, this alone will give you caution in your trading, so that you will not trade and be expecting a break, even though there is always break in the order block. You won't be you will not expose yourself expecting a break before it will disappoint you. No. So these order blocks are very, very important. Very, very important. That is one of the many ways which you can actually identify them. Either you use the last candle before a big move, and also use the higher time frame, such as the 4 hours for, or the daily hours for stronger order blocks. Now we have tools that can help us to figure out our order block. Now we have the volume to confirm big traders who are active. Now volume, the volume, volume, like I said, in our liquidity training, the video, the liquidity, that's a video before this particular video, I said something. I said that volume is amount of money that traders put. The amount is the volume. Why? Because it is the money that moves the market. And then we have the Fibonacci retracement extension also, where you see price often retests around the 50 to 78%. Price mostly retest around that area. Then we are also having the support and resistance. Now you have to check for alignment. Not all other blocks are support and resistance zone. Please take note of that. Not all. Now there is difference between support and resistance and other block. Now look at this. Now let me look at one. Now this particular place, there is an order block here. There is an order block here, but this place is not a support. This place is not a support. Let me draw the other block. The other block is inside. So we have the other block here. Look at the other block. This big candle is actually our is actually is not our support zone, but it has, it's not our support zone, but it has other block, and this is the other block. While we have areas that have support and resistance, and also other blocks. Now let me quickly look at them. Like here, you see the combination of these two here is what is area of support, and they also have other block. The combination of the two is what support. Now this particular place is actually what area of resistance, and it has what other block. Now not all support and resistance are other block. Now you see this is actually an area of resistance also, and it also have what its other block. It also have its other block. Like here it has other block. Like here it has other block, but it does not have area of support. Does not have area of support. Now let's quickly move. If you want to understand support well, check my video on support and resistance. You understand support well, and also the strategy of trading support and resistance. I taught it very, very well. You understand it very well, and also the concept of other the concept of liquidity will also help you. Now I'm discussing now other block, and very soon the next video is going to be very interesting. I will tell us what I will be discussing in the next video, and you can't just wait for the next video. You can't just wait for the next video. Now, how to trade with other blocks. Number one way we can trade with other blocks is that you check for breakout trade, either after price breakout of an order block with strong momentum. Either there is a strong momentum in the breakout. Why? Because if there is no strong momentum in the breakout, it means that your price will definitely not move. So you need to confirm, like I said, you need to confirm if your the other block is valid. Don't just enter trade because no, don't just enter because you see it's moving the opposite direction. You must be able to confirm. You must be able to confirm if there is strength in the candlestick. Now how can you do that? By the kind of wick that you see. That's the tail that you see in the in the candlestick. Now let me delete this quickly. Let me delete this quickly. Let me delete this. Let me delete everything. Now look at it. One of the way to discover strength. Look at it. Let me draw this. Yes. Just hope you are seeing this now. This particular candle you see is longer than the previous one. The body is longer than the previous one. That's a sign of strength in the market. The sign of strength in the market. Look at this. You see the other block. Look at this. That is the other block. Now this is actually, this candlestick came with strength, so much strength in the market. That's a proof of break of the other block. Look at it, this particular candlestick. This particular candlestick came with strength. See, it came with strength. There is momentum. There is momentum in the market. It's a proof of momentum. Now, when you see this, just know that there is actually what? A breakout. Now, the second is a retest straight the retest trade. Now wait for price to come back to the block, then look for rejection candlestick. Like I've showed you, I've told you about rejection candlestick. How will you know a rejection candlestick? When we have long wick, it shows rejection of prices. Long wick, when we have rejection of price. Now you see how that price must what must come to what? Test. Price must come to test. Now look at this. Look at this. Look at this. This is an order block here. This is an order block. Oh, sorry. This is an order block. Yeah, this is an order block. So the next candlestick, look at the next candlestick. The next candlestick do not just go like that. Look at it. This particular candlestick. The next candlestick did not go. It came back to retest. You see, that's why you see this week. Came back to retest this particular order block before it start what? It start going. It came to retest it. Now price will definitely retest. Okay, look at this particular order block. Look at this clear example of this particular order block. Look at this order block. You see that price came. Now look at it. This is the order block. Now price broke here, went a little bit, and then still came back to test this particular order block before price begins to what? Begins to move in this direction. You get it? Before price began to move in this direction, it came back, used this this as the order block, came back to what? Retest. Always wait for retest. You see, after this order block, there was what? A retest here. There was another retest here. So you need to understand this thing, please. So now guys, so when you see this retest, you can be rest assured, you can imagine how the other block came down to this particular place too. You see how it's working. There was a fake breakout of this other block before the strong move. You see the massive move here. Look at the massive move in this direction. Sorry, the massive move in this particular direction. Look at this move. Look at this move. Look at this massive move. After the break of this particular order block, there was a massive move here. Now, guys, let's move on. Let's move on. Now, that's the second way we can actually identify that, and also the rejection of prices. That's the weak rejection of prices. Now we have the trend trade. Now it must follow the trend. Now in an uptrend, buy at bullish order block. In downtrend, sell at what? Bearish order block. Now we are having trend. Now this particular trend now is actually a bullish trend. Now look at bullish trend. Now we are what? Buying. This is bullish trend. If you are to trade, you should trade for a buy at this particular location. At this particular location. Look for order blocks at these particular locations. That is how to trade. That is how to trade. At these locations. Look for order block at these locations. At these locations. That's because we are in a bullish world. We're in a bullish trend. You see another order block. You're looking for order block at this particular location. Now, following what? The trend. You need to follow the trend because the trend is always your friend. Are we together? Now, that is for that. Make sure you follow the trend when looking for order block. Now, After doing that, you need to set up your stop loss. But I want us to understand something as regards our stop loss. Stop and target. Now, our stop loss just beyond the order block. Why? Because of liquidity hunt. Liquidity hunt. Institutional market makers will always hunt stop losses. So just beyond the order block, you put your word. Don't put it inside the order block or and close to the order block. Just a little bit above or beyond. Then your take profit should be next area of support and resistance or liquidity word zone or liquidity zone. Now, what I mean is, if now you are buying, how will you put your stop loss now? Your stop loss should be below here. It will be below here. That's if you are doing for this particular candlestick, particular order block. Now it should be here. It should be here. That's for this particular order block. For this particular order block. And then it should be here for this particular order block. Now we are doing this so that in case there is actually a stop hunt, it will not take our stop loss away. Why? Because market makers always bring stop hunt. They always give stop hunt. They always do stop hunt so that they can take away traders from the market. Don't fall prey to their tricks and targets. Don't fall prey to their play. Don't fall prey to it. So your stop loss should be below here. Just imagine you're having this thing. Your stop loss should be below here, like this, while the other blocks can be here, so that there is actually distance. Even if they want to break the other block, it will not touch your distance, your stop loss, before moving for the bullish trend. Now that is for that. Also, our take profit, like I said, it has to be the next support and resistance zone. Now we have how to boost our accuracy. Now combine other blocks with Fibonacci level, combine it with moving average 50 and 200. You see how I always emphasize on moving average 50 and 200, because it's actually a dynamic area of support and resistance, and it's actually very powerful in trend. And then market structure, higher high, lower low. Now, and then liquidity zone. Watch my video and learn all these things. Watch my video and learn all those things. I've taught I've taught on market structure and also moving averages. I've taught on liquidity zone. Watch and then learn. So you can combine this to form a confluence of many indicators of your trade. Then the next is the risk management. Now use proper lot sizing based on stop loss distance. Aim for good reward ratio. Now 1 to 2 reward ratio is not bad. Like I always say, you must not go further to 1 to 3 reward ratio. You can go for 1 to 2 reward ratio. Now trade fewer but higher quality setup, and measure more on higher time frames. Higher time frames, no lower time frames. Now the next one is mistake to avoid while trading other blocks. Now, marking every consolidation as an order block. Don't mark every consolidation as an order block. That's one of the mistakes traders usually use, and they usually make this mistake is because they usually use lower time frame. Now using only very low time frame is less reliable. That's why I advise you use the 4 hours and the daily time frame, because they go a long way in telling us the truth about the order block. Now, entering without confirmation. Many people, once they see order block, they enter without confirmation. No, you have to see order confirmation, moving average crossing. You have to see market structure. You have to see many other things, like in the 15 minutes time for now. Looking at this now, I'm supposed to, okay, according to this order block, now we're going to be what? We're going to be selling, but I'm not seeing any confirmation for the selling. And in fact, in the lower time frame, 15 minutes time frame, I'm not seeing any confirmation. So I will stay away from the market. I'll look for another pair. Let me see. I'll look for another pair. Now, this particular pair is showing me an order block to buy. That's the bullish order block. You see it actually showing me a bullish order block. Turn it now to 4 hours time frame. You see it actually showing me order block, bullish order block. In fact, confirming with support and resistance. Are you seeing it? And then 15 minutes time frame, now you can see it has broken the structure. It means that I can actually buy this market at this particular place and make profit. Very clean, very clean. I can enter here. You know, many times I do live trade, so that I will tell people, so that I will show people what I'm doing is what I'm teaching. Now with this, now I can enter this buy now and make profit. Yes, I can enter this buy now and make profit. But the Euro USD is not ready for me to sell it. So I leave it. Let me see Euro JPY. Let me see the other block. You see, we have other blocks here too. So that is just it. When you don't see confirmation, you don't trade. You leave the market. Forget the market for some time. Change your peers, and you definitely see some setups there. Now, ignoring major news event. Please don't ignore major news event. Why? Because fundamental analysis is very tricky and risky. Fundamental analysis can blow your account. So once there is news in the market, don't neglect the news. Trade along the news, or you stay off from the market, because there will be wider spreads. Remember liquidity. If you watch my video on liquidity, I explain how that news events usually bring about wider spread. Now, practical tips. Now, if you are to use the order block, now you are to use it on liquid pairs like Euro USD, GBP USD. They have tighter spread. Liquid pairs have tighter spread. Now you have to identify the order block from the 4 hours time frame and the daily time frame, and enter it on your 1 hour time frame or your 15 minutes time frame. Now you have to backtest this strategy before using it in your real account. And before then, you have to learn more about smart money concept, that order block, fair value gaps, liquidity gaps, etc., etc. Now, the good part of it is that I am going to be teaching on liquidity gaps. The next video is going to be on liquidity gap. Liquidity gap. Now, additional note, refine order blocks by using body and also wick for precision. Use the wick for precision, and also mitigation block. Price partially fill a block before moving again. Now I'm going to be teaching also on mitigation blocks. Now watch out for our next video. You are going to enjoy it. Then multi-time frame checks. You need to check multi-time frame, higher time frame to lower time frame. Now I've done video on multi-time frame analysis already. Now you just have to watch this video. Just have to go and watch the multi-time frame analysis. Watch the video and learn a lot from it. Now guys, I will see you in the next video. Remember, the next video is going to be liquidity gaps, and also the mitigation blocks. So watch out for the next video and learn. See you. Have a good day. Don't forget, guys, to share this video with your family and friends. Share this channel. Let them know that there's a place for them to learn Forex and crypto for free. And then if you have any question, please drop it on the comment section, and I will be there to reply you in a jiffy. Thank you so much. See you in the next video.